Good morning, everybody. This is the live market open for Tuesday, March 15th. I'm Yohay Elam of Forex Crunch and Market Movers podcast, doing the show as usual every morning for FX Trade. We are at the Ides of March, as the Romans used to say. As usual, we'll cover recent developments, charts and levels next 24 hours, and of course, answer your questions. If you cannot see the chat box under the screen or beside the screen, inside the video, go to this address, please. tlk.io/fxrate-live-video. Okay, as usual, we'll start with the mood. Two developments overnight. The Bank of Japan does not lend a helping hand. They did not make a significant change in policy. We'll discuss the details shortly, but it doesn't help the mood. The mood was already sort of not so great, and now it doesn't help at all. And China also considers a Tobin Tax. That means taxing financial transactions. Perhaps it'll remain at zero at the beginning, but this is also sort of dampening the mood. And political development, we did have Russia announcing it'll pull out of Syria. At the moment, this doesn't have any impact on currencies, and we also have key U.S. primaries tonight coming up. We'll talk about that, but this might have an impact tomorrow morning, but not at the moment. Okay. So let's talk about also the data we had yesterday. Yesterday, in the Eurozone industrial output actually beat expectations with 2.1%, but it wasn't such a big surprise because we already had Germany meeting expectations. The RBA meeting minutes were slightly leaning to the dovish side. I cannot say this is the reason for the weaker Aussie because these minutes are a bit stale. They're from a meeting held a few weeks ago and the market mood was much worse. They were talking about global risks, emerging markets, and room for cutting rates. But since then, we know that things have improved, so wasn't taken that seriously. Now, Japan rate decision. Let's talk a bit more about that. They decided not to change, and they're sort of reluctant about negative rates. First of all, let's look at the chart, okay? So dollar yen, as you can see, it extends its falls as we speak, currently at 113, flirting with this round number. We already had the pair above 114, okay? As you can see, there were some around the decision itself, there were expectations for perhaps further easing. I mentioned that one of the reasons for the Bank of Japan to ease further was that Draghi announced a lot of policy measures, but perhaps it also had a different impact. Anyway, we're currently 113, some support 112.80, 112.20, and then 111, the double bottom. On the top side, 114, 114.55. Let's talk a bit more about the Bank of Japan. So the Bank of Japan was expected to announce some measures, first of all, because of Draghi, secondly, because Japan is in contraction. They did announce last time negative deposit rate. It was a move of historic significance. It was the first time they did such a thing. And some expected them to enlarge it this time. They did. Basically, the only change they did was to the opposite. There are some money market funds called MRFs, and they're now exempt from negative rates, okay? So actually what the Bank of Japan does is sort of minimize the impact of these negative rates. They also said they will have to wait and see. And they also changed the statement regarding further cuts in the negative rate. They just removed it away. Anyway, they're not sure negative rates are the way to go. It hurts bank profits. Perhaps they've also seen what happened to Draghi. They went further into negative ground, that it has less and less impact on the currency, okay? But of course, needless to say, when the Bank of Japan does not act, it has an adverse impact for them on the currency. That means a stronger Japanese yen. Anyway, they more adopted a wait and see approach this time. No new measures. We know that Joseph Stiglitz is in town, is in Tokyo, and perhaps he's meeting with the government. The government is meeting with the Bank of Japan, and perhaps we'll see more fiscal stimulus. Another thing important to remember here, the Bank of, in Japan, in July, if I'm not mistaken, we'll have elections to the upper house of parliament, and perhaps the government will want to give a boost to the economy before that. But anyway, the Bank of Japan is reluctant to use the negative rates tool. They also didn't change the QE program. It was left unchanged. The monetary base, the target monetary base, is 80 trillion yen. Okay, so no changes in policy from the Bank of Japan, no significant ones, but a clear reluctance to go forward with the negative rates, and the yen is strengthening. Okay, yeah, as we speak, it's stabilized at 113. Yeah, maybe you have see some questions here. So the outcome, Fabian says, good morning. The outcome from the Bank of Japan is yen strength and risk off across the pairs. Yeah, risk off actually began before the Bank of Japan. We already saw that yesterday with the strengthening. Sort of the yen was not going anywhere fast and the dollar was strengthening a bit. Commodity currencies came off the boil. Well, so did the euro and the pound. Now it's sort of, we're seeing a bit more of that. And the comment from Jax, maybe the Bank of Japan saw what happened with the ECB and said, let's not poke the bear, we'll just let the market do its thing. Yeah, I suspect, yeah, that you're right, Jax. It's because I guess they didn't want to, deliver too much and face the disappointment, so they went for let's not do anything. Yeah, no expectations, no disappointments. Okay. Okay, let's continue with. Let's go back to euro dollar. Euro dollar, of course, this is the big move last week because of the disappointment. Well, the ECB did deliver a lot, but said they will not reduce further the rate. So we had euro dollar fall, the triple bottom at 108.20, and then shoot all the way up to 112.15. Finding very nice support here at 110.70. We had the pair sort of settle down, climb off the tree, the Draghi backfire tree. At this moment, we're seeing it this morning 20 pips higher off the lows. It didn't fall all the way to 110.70. It fell to 110.80, but I stick to this line. Anyway, euro is looking for a new direction, currently finding some support at this level. Trading in range. The range is becoming narrow once again. 111.20 is the current level. I still see 112.15 as resistance and 110.70 as support. Further support on 109.60 and 108.20. Further resistance is 113.75 on euro dollar. Okay. With the risk-off sentiment this morning and also yesterday, we also had the pound come off the highs, finding support here at 142.40, more or less. 142.80 is also a line to watch out for. We had a gradual climb down from 144.40 back to the lower ranges. I think I mentioned this a few times last week. There is no justification for the rise of the pound. The referendum, the Brexit fears are still here. The economy is not doing as well as it used to. We don't have new data, but still there's a reason. When the market mood became a bit worse, the pound lost already 200 pips off the highs, or nearly 200 pips. Anyway, further support 141.75 and 141.25, which is much stronger support. Remember, we already dropped to the 138 handle when things looked much worse around the referendum and around the market mood. Okay, let's continue with dollar CAD. Also here, worse market mood. Remember, Canadian dollar had bad jobs report in Canada on Friday. It was the loonie responded to that for about 30 to 60 minutes, and then because of the positive market mood, dollar CAD continued south. The Canadian dollar continued strengthening, but now this week the market mood is quite different. Dollar CAD extending its gains. As you can see, 85 pips. It also goes hand in hand with the slide from the highs of oil prices. Needless to say, 133.44 at the moment, 133.70 is resistance, followed by the veteran line of 134.60, support at 131.70. Okay, let's jump to oil prices. You can also see here the worst market mood. The WTI crude oil touched $39 and is sliding quite a lot, including this morning a drop of 2.5%, nearly $1 at 36.37. Some support here at 36, followed by 35. In theory, the retreat of Russian forces from Syria, which is only a reported one, only an announcement, indicates an improving political situation in Syria, which means more flow of oil. In theory, I don't see these things as related. It's more just the ebb and flow of markets. But if you see people make this correlation, it can make some sense. I don't think it's related. It's more political news now than has direct impact on oil as I see it. Currently, more important news for oil is that OPEC and non-OPEC members do not seem in a rush to reach some kind of an agreement on cutting oil production. And this specifically relates to Iran, which has just come back online, come back to international markets, and they're keen to ramp up production to send as much oil as they can to markets, and they are not interested in any kind of freeze. Okay. Yeah, a comment here from Safran. They retreat, according to the Russians. Only some tactical maneuver to alter the SA. What's SA in this context? And US boots on the ground strategy. Yeah, it's more of a political game. And they want to declare victory. They hardly had any casualties, and perhaps they fear that things could get worse. Currently, there's some kind of ceasefire in Syria, which is more or less holding. Let's see if it really works. It's now 5 years since the civil war there began, and it's been quite devastating, with lots of people killed. Saudi Arabia, sorry. Okay, yeah. Saudi Arabia is also involved in the war on the other side, more or less against the Assad regime. Russia is with the Assad regime, and there are peace talks going on in Europe. And anyway, it's a very sad story with many people killed, with refugees coming to Europe, refugees in Turkey, internal refugees, internally displaced people. It's a big tragedy over there. Anyway, let's continue. Talked about the Canadian dollar, about oil. Australian dollar, also same story, coming off the highs. Reached almost 76 when things looked really good. Now there's some kind of a worsening in the market mood. 74.65. The RBA was dovish. This also contributed a bit, but remember these meeting minutes are a bit stale. Anyway, 74.40 is the next line of support, followed by 73.75, resistance at 75, and 76 up there. Kiwi dollar, same story, off the highs. Well, it never had a lot of chance because last week the Reserve Bank of New Zealand cut interest rates. Okay, so this keeps the Kiwi depressed in any case. Let's see if we can find support here at 66.20. Anyway, further support 65.50. High resistance at 68.20. Another comment here. I guess you've seen German weekend election results. We have to deal with the mess now for at least 4 years, but probably more. Yeah, I talked about that yesterday. For those that didn't follow that, we had regional elections, if I'm not mistaken, in 3 German states, and we've seen there, Merkel's CDU center-right party suffering losses, mostly to the Alternative for Deutschland party, AfD, Alternative for Germany, which is a right-wing anti-Euro, anti-immigration party, to make things very, very abstract, of course, and simplified. Anyway, but also Merkel's coalition party, the center-left SPD, the socialists, also lost some ground. And so it was more the Greens that I think became the largest party in Baden-Württemberg, and the AfD. So it's more the left and the right on the sidelines that gained ground against the mainstream parties, similar to what's going on here in Spain. Here in Spain, by the way, still no government and good chance of elections in June 26th. Anyway, Merkel did say she'll continue with her policy. Nothing's changed, but well, things are becoming a bit more complicated for her and for mainstream European politicians in general. Okay, let's continue with more currency pairs. A few crosses. Dollar Swiss, currently at 98.54. Some kind of a wobble here. Well, 98.50 to 99 is the current range. Not moving anywhere fast. We have a rate decision in Switzerland on Thursday, if I'm not mistaken. Yeah, Euro Swiss also very stable. Very stable, 109.55. Very tight range right here. No big movements. We had big movements in the pair, of course, last week around the ECB. Suspected small intervention to weaken the franc once the euro was weaker, but then the euro gained a lot of ground because this move by the ECB backfired. Less need for the S&B to intervene. Euro pound moving back up, weakness of the pound and stability in the euro, or gradual grind lower in the euro, but it's more weakness of the pound alongside commodity currencies. So currently at the just over 78, 78.50 is the next line of resistance. 77.40 is support. High resistance 79.30 and further support 76.60. Euro yen, well, stronger yen this morning on the back of the Bank of Japan, 125.62. Off the, we were already at 127. Anyway, 125.50 is the line of support. And no, sorry, yeah, 125.50 and 125, 124 and 123 are all lines to watch in this cross. Pound yen worsening market mood off the highs. 163.80 worked very nicely. 163.80 yen as resistance. We're back to 160.80. The round number of 160 still works as support despite the breach we've seen beforehand, followed by 158.50 and far below 156. On the top side, we have 162.20 and 163.80, and this fascinating, well, for many traders, this is a fascinating currency pair. Okay. Let's continue with, yeah. So these are the currency pairs we usually cover. Of course, your questions on these currency pairs and any currency pair you wish are more than welcome. In general, any kind of feedback on the show is always welcome. Directly here in the chat to Mauricio, which runs the show, to Adinda, which manages the show. For any kind of feedback always is welcome. Okay. Let's talk about events that we have today. Talked a lot about the Bank of Japan, which already happened. At 10 GMT, we have the Eurozone employment change. This is a lagging figure. It shouldn't move markets too much. But then at 12:30 GMT, we have retail sales in the United States of America with PPI and the Empire State Manufacturing Index. Of course, retail sales is the most important event. All right. Note that the US events now begin at 12:30 GMT because the US and Canada already shifted to daylight savings time. So let's look at the figures, okay? Let's see. Now, an important thing to note here is that last time when we had the retail sales, they surprised to the upside. It was in mid-February, and that more or less marked the bottom in stock markets. That's when the general mood in markets began improving, and for a good reason, because for many long months in 2015, we had retail sales disappointing time after time. Now, consumption is so critical to the US economy that it's understandable why sudden relief there was positive. Okay, so we have many figures regarding retail sales. Let's begin with the headline one. And the total number, I don't know why we don't have an estimate here. Anyway, month over month, it rose 0.2 last time. The control group, which is important month over month, rose 0.6. But this is the core figure. It rose 0.1, and also this time it's expected to rise 0.1. So relatively modest expectations from retail sales. Also note the year-over-year ones, but month over month seems more important. At the same time, we also have so core sales in the control group would be the most important ones. At the same time, we also have producer prices. In general, inflation has surprised to the upside in quite a few months, not only 1 month like retail sales in the United States. So PPI is of course the minor figure. We have the CPI, the consumer price index, tomorrow. Today it's the producer price index. Anyway, headline figure month over month this time is expected to slide 0.2, mostly because of oil prices after a rise of 0.1 last time. And where's here? The core PPI is expected to rise only 0.1 after a rise of 0.4. Modest expectations year over year. PPI is still influenced by oil prices, of course. After a drop of 0.2, now we're expecting 0.1. But when we exclude food and energy, of course, oil prices, we're expecting a rise of 1.1 after 0.6. That would be sort of encouraging towards the big event tomorrow, the Fed decision. Okay. Comment here. China has boots on the ground in Yemen. That kept out of mainstream news. China is setting up a naval base in Djibouti by invitation next to the American base. Look on the map. It's crude oil shipping route. Yeah. Called China. Yuan should be the official currency of Zimbabwe as they extinguished their debt of 330 million US dollars. Wow, China took over the economy by backdoor for only $30 million. Stuff maybe traders don't know. Yeah, I certainly don't know about that stuff. I know that China builds a lot in Africa. I didn't know they're taking over the economy or something like that, but yeah, they do have, of course, interests mostly in Africa and also a bit in the Middle East. They have a growing hunger for oil. It's nothing new. It's in the past 15 years or so. But anyway, the problem with oil prices, the fall in oil prices, is mostly because of supply, not demand. Anyway, we talked about Chinese releases this morning. Yeah, euro dollar is still a little bit pressured. Well, we had an attempt to move higher, but it didn't go too far. Currently, during the show, it's mostly unchanged. Okay, I didn't talk about the Empire State Manufacturing Index. Well, it's the third release. Because retail sales and PPI are more important, but still worth noting that the manufacturing sector in the United States is still lagging behind. We had minus 16.6 points last time, and this time it's expected to rise to minus 10 points, still negative, of course. All right, and in the afternoon we have milk prices in New Zealand. Last time they rose after 4 consecutive falls. Let's see what happens this time. Of course, an important release for Kiwi traders. And of course, the big event of the week is coming tomorrow, and the tension is already growing. It's the Fed decision, okay? And for that, I wanted to show you something I show many times. It's the implied probability. So for tomorrow, very high chance of no change. No change, of course, is expected. Even according to bond markets, a small chance of a rate cut. Okay, no rate cut is expected. No rate hike is expected either. For April, an event without a press conference, no change is expected, 0.5% as a maximum. But this is an interesting development for June, which is 3 months from now, and it also had this decision on June 15th also includes a press conference and fresh forecasts. For this event, there is a chance, according to bond markets, more or less 50-50 for a rate hike, and that's news. That's higher rate hike expectations And if we look all the way towards the end of the year, yeah, it's already, well, mixed, but there's a chance of 2 rate hikes. So bond markets have become more optimistic on the US economy, on the global economy, and foresee more rate hikes, okay? This is because US figures have improved. Markets, more importantly, perhaps for the Fed, also have become more stable. So that's perhaps why we're also seeing this goes hand in hand with a stronger US dollar. Now, the Fed is usually extremely, extremely cautious. So I think that we could have the US dollar strengthening towards the event. And then if the Fed only says, okay, no change, and yeah, less rate hikes this year, you already knew it, but we still think of raising rates, it will not be perceived as so hawkish because markets are already gearing up for a more hawkish decision, okay? So let's see how things develop, of course, tomorrow as well, but at the moment, the stronger US dollar implies higher expectations for a more hawkish tone by the Fed, and less that means if the Fed is a bit more hawkish than markets thought a week ago, it will not be a big surprise anymore. Okay, the dot plot, they last released it on in December when they raised rates. There they showed the median probability according to the Fed members. It showed a probability for 4 rate hikes in 2016. Nobody believed them then, but 2-3 rate hikes were seen as being on the cards. At the beginning of the year, things deteriorated. Fears of Chinese yuan devaluation, crash in Chinese stocks, worse than expected figures in the United States, crashing oil prices, you name it. And expectations moved to first rate hike only in 2017, 2018, okay? But things did stabilize, things did improve since then. And the market mood is certainly better. And so now we do expect some kind of action from the Fed. Talk about negative rates has disappeared. Talk about a US recession has disappeared. But we still don't know what's going to happen next. Okay, we'll do a full preview of this tomorrow. See comments here. Is it right that we expect market to be volatile due to the very dependent on bond yields, risk on, risk off, and funds being shifted from equities to... I don't know if funds are being shifted or rotated, as some say, from bonds to equities or the other way around. Markets are volatile, and we do see the risk on, risk off. I think it was 2 weeks ago that we didn't see the risk on, risk off. We just saw either a stronger dollar across the board or a weaker dollar against everybody, also against the yen, which is the ultimate safe haven currency, okay? But since then, so I think we're still in risk on, risk off. When things get worse, we see more demand for the Japanese yen, more demand for safe haven bonds like the US Treasuries, German bonds, and also Japanese bonds, of course, and other stuff like that. And less demand, of course, a sell-off in equities, in stocks. And when we have a good market mood, we have, of course, rising oil, rising stocks, rising everything except safe haven yen. Okay? Does anybody know about the website where you can see single currencies in the chart in relation to the current strength or weakness? No, I don't know about that. The US dollar index, in theory, reflects the strength of the US dollar, but it's mostly composed of the euro, because historically it was composed of mostly of various European currencies. And since the inception of the euro, it's, I think, 50-something% euro. I don't know about similar things for other currencies. So, yeah. Comment here, cable breaking to the bear flag, downtrend resumption. Yeah, it looks like a breakdown of the flag. You can see here, this diagonal, this slide, sort of a sliding flag, and now it's breaking even lower, breaking above this support line of 1 42.40 that I mentioned before. Next support 141.75. Bad mood in markets, and nothing that I know of in the UK this morning. I didn't hear about any new poll or something like that, so I can't say. It's more negative market mood pushing cable lower, together with commodity currencies, together with oil, which extends the slide as we speak, and with the stocks, and yeah, okay. Comments here, I'm also looking for that. Yeah, I'm very happy you guys help each other. I see here, so not a note. The commitment of traders, yeah, it's a report published every Friday about the market, the tendencies of the big boys. New Telegraph poll. Let me check out the Daily Telegraph and see if we have news from there, or if you can share the link or the news, that'll be great. Brexit leave back in the lead. Okay, that's news. Needless to say, these polls change all the time, but they do have an impact. So thanks for this news, Luca. So this is probably another factor pushing. Yeah, I see an article here. Maybe this is what you're referring to. Yeah, the Brexit campaign has the edge. Just posted it right here. Anyway, so let's try to get a few more details from this one. Telegraph is, of course, leaning to the right towards the Tory party, and they have many Eurosceptics there. Anyway, they show, well, this very small edge. I see this paragraph, the Remain campaign, staying in Europe, so 47% and leaving on 49%. Anyway, this article was published basically just before we began the show at 7:56 GMT. I don't know when it was. They dub it as an exclusive poll for the Telegraph. And they also show that the out supporters are more motivated to win. We're seeing cable extend its falls. So I guess it's also related to that, but also to what I mentioned before, a worsening market mood. Okay, more comments here. I wonder, can the US bond yield can be used to trade correlation to sell the euro? There is a correlation between bond yields and currencies, but it's not always there, okay? The theory goes that if a bond yield, for instance, in the United States, if it's lower, okay, that means less demand for US dollars. But it's a bit counterintuitive, because what pushes the bond lower? More demand for the safe haven yields, for these bonds. So if more money comes into bonds, yields fall, and that makes the currency less attractive, okay? Same thing goes with German bunds or Japanese JGBs. Anyway, the correlations are not always there, but in theory, if we have the ECB, well, when it began the program, at least, when it began buying government bonds en masse and bond yields began falling, it made the euro less attractive. But the euro was also less attractive because the ECB prints money and devalues the euro. So there were just too many euros floating around, making it less valuable. So I'm not sure that, the correlations with bond yields, something worth noting, something worth following, but it's not always, and I can't tell you which one leads, okay? These things usually just go together. We've often seen in recent months a good correlation between this risk on, risk off and oil prices. So sometimes the leader was oil, means news related to oil markets had an impact on the whole market. So if we had a headline about cutting production, it immediately lifted oil, lifted the Canadian dollar, lifted also stocks, and pushed down the Japanese yen, and the other way around, of course. So I would look, if you want to look at sort of external financial instruments as leaders for currencies, I would look more to oil than to bond yields. Okay. Yeah. Okay. So if you want to put beforehand this link to the Telegraph article, thank you, Luca, for pointing that out. That's certainly has an impact because Telegraph is an influential newspaper, and well, in general, every poll has an influence. Yeah. Well, have a good day at work, Sinatra. Yeah. Anyway, we have a few more minutes for the show, and then we'll do the wrap up as usual. Any more questions? Let's just. One last post about the pound from Jason Greystone at TradingView. This is the flag formation. Thank you very much. I'll share it. Yeah, with you guys on the screen here. So thank you very much for pointing that out, Sinatra, in the chat. See you tomorrow. The question here: what are you expecting from the euro today? Well, the euro took its time to rest. Okay, euro dollar is stabilizing just above 110.70. Question here: bounce or break? I believe we will see at least some kind of move today because we have critical figures today from the United States. We have the retail sales, of course, first and foremost. So I believe, first of all, we will have a bigger movement today than yesterday. Now, to which direction? Well, the easy answer is it depends on the outcome of retail sales. A good figure means a stronger US dollar. The weaker figure means a weaker US dollar. My tendency is towards a better than expected result, even a marginally better than expected result in the United States. I believe will lead to significant rise in the US dollar and the fall of euro dollar back below 110.70 to the previous range. That's my tendency, but it's not trading advice whatsoever. Okay. Other pairs to watch today: the Kiwi dollar, apart from euro dollar, which has had its time to digest Draghi and now is ready for the next move. I would say that we could see, well, a bit more perhaps from dollar yen after the Bank of Japan's decision. Especially, we could see a further deterioration in dollar yen if we have a disappointing retail sales report in the United States. Otherwise, this pair could be a bit more boring. And of course, the Kiwi dollar is waiting for the milk auction, which is always significant. So yeah, so I'm sure we'll have action over there. Kiwi dollar is currently deteriorating. Perhaps it could fall under 66.20 if we have a poor milk auction, or bounce higher, recapture 67 if we have a better sort of a rise in milk prices. Okay, so I'm looking at euro dollar, Kiwi dollar, and also dollar yen. Okay, question here: do you think the yen will be strong for a while now? Yes, the Bank of Japan didn't do enough, and market mood is still negative. Okay, but we can always have the market mood improving. So yeah, but the yen sort of now has the upper hand. The trend is for a stronger yen, a worse market mood. Okay. So a few more questions here. Anyone watching dollar vs the Indian rupee? No, I mean, I'm not watching it, but maybe we'll take a quick look. $67.30 at the moment. It's fell quite a lot in this month from the highs. Must say I haven't been following events in India. I just know that the economy there is doing much better than other economies in Asia because India exports more services to the world than commodities or manufacturing like China. The growth rate in India is better than in China. That's significant. Both are the most populous countries in the world. Anyway, if we look at the charts, I would say this is some kind of support here at 67 and resistance at 67.50. A bit of a choppy trading here. Okay, and this is a high line of resistance. Yeah, 68.80 and low support here at 66. Okay. Another question here: what about event risk when the estimate is lower than the past release? Then it seemed to be negative sentiment, and the big boys positioned themselves 24 hours before the release to take advantage of a higher price. What's your view? Well, the big boys do position themselves, but they can be wrong, of course. So when the estimate is lower than the past release, yeah, the past release matters a bit less. What matters more is expectations vs reality. Okay, so if expectations are low and the outcome is better, it's of course good for the currency. If we're talking about retail sales, for example, talking about employment, it's always the opposite. Yeah, in general, but I agree, when expectations are low, there's a higher chance of an upside surprise. That's why I think in this case of the US retail sales, we could see some kind of an upside surprise. But you never know. It's quite a volatile figure and still very important. So every surprise will have an impact. Question regarding the strength of the Australian dollar. Do you think the conditions would really last? Look, the Australian dollar has good reasons to rise. The economy is doing well. Employment looks good. We'll know more about that later this week. GDP was rising quite strongly. The Australian economy is diversifying away from China. So I see the recent move in the Aussie dollar as a correction, going hand in hand with the worst market mood. But specifically, the Australian dollar is backed by a strong Australian economy. So yeah, those are my thoughts. Anyway, it's time for the wrap-up for today. This is the wrap-up for the live market open for Tuesday, March 15th. We're seeing slightly worse market mood in markets. First of all, the Bank of Japan doesn't go dovish, not like the ECB. It doesn't lend a helping hand. The news we had this morning is that the Bank of Japan left policy unchanged. It's reluctant about negative rates. It wants to wait and see what the impact is. Okay. It has removed the text regarding another cut in the negative rates if needed. It exempted a specific type of money funds out of the negative rate, and it didn't change also the QE program. This is why we have a stronger yen this morning. No new dovishness from the Bank of Japan, even a slight hawkish decision. Okay, we'll show the chart soon. In addition, we had the RBA meeting minutes. Also, well, they lean to the dovish side, but they're a bit stale. So perhaps it has a small negative impact on the Australian dollar, but it's more the negative market mood. Another thing, well, market mood is hit by China considering the Tobin tax, and of course, falling oil prices, something that began already yesterday. Okay. Yeah, so let's look at charts. Euro dollar is sliding from the highs, finding support above the 110.70 level that we talked about many times. It's off the highs of 112.15 that it reached in the Draghi backfire event. Further lines to watch: 109.60, 108.20, resistance 112.15, 113.75. Pound dollar, as some people mentioned here, breakdown of the bearish flag. Another poll in the UK showing small, marginal, but still a lead for the exit, for the Brexit campaign, for the leave the European Union campaign of the highs. Also worse market mood. Further support 141.75 and 141.25, resistance at 142.80 and 143.60. Dollar yen, as aforementioned, the Bank of Japan did not introduce new stimulus. 113 is the current level. Support 112.80, 112.20, and the double bottom of 111. Resistance 114, 114.55, and 116. Dollar CAD. Here we can see the worst market mood. Falling oil prices 133.37 at the moment. Resistance 133.70, 134.60. Support 132.60, but more importantly 131.70. Australian dollar, we talked about justified strength in the Aussie, but markets are, Forex is never a one-way street. Currently 74.75, off the round 75 level. We already touched, got very close to 76. Anyway, support awaits at 74.40 and 73.75. And the Kiwi dollar awaiting the milk auction today, currently 66.50. Support 66.20 and 65.50. Resistance at 67. Okay, events coming up for today. Today we do have significant events. We have, well, Eurozone employment change at 10 GMT. It's a bit stale. The big event for today is US retail sales. Consumption is a huge part of the US economy. We have also, last time it was finally better than expected, and it marked sort of a turnaround in US stocks. It was finally some good news. That was for January. Now we have the figures for February. Expectations are relatively modest. Let's see how things evolve. At the same time, we have PPI, the producer price index, expecting an improvement there, especially with the core figures, which exclude oil. And we also have the US Empire State Manufacturing Index, which is a reflection of the manufacturing sector, needless to say, which is the poorer part, the weaker link of the US economy. And also we have New Zealand milk prices. Also, late at night, we have a round of US primaries, both in the Republican and Democratic parties. In the Republican Party, this could either it's sort of a make or break moment for Donald Trump. This could have an impact on markets if Donald Trump wins. Both Ohio and Florida, it could be negative for markets. And if he loses them, Ohio to Kasich and Florida to Rubio, especially Ohio, there's a better chance of a good fight over there. Then perhaps it'll be a better market mood. So far, we didn't have an impact by US primaries on markets, but this second Super Tuesday could be more significant. Okay. More questions before we head off. Not sure employment is weak in Australia. I didn't say it's weak. It looks, I said it's this week. Okay. Anyway, employment in Australia looks good, and we'll have it. I think, the report on Thursday, if I'm not mistaken, and the night between Wednesday and Thursday after the Fed decision tomorrow. Of course, lots of tension towards the Fed tomorrow. Still some 36 hours to go. And the last question here: how's the USD behave against the US rupee? I must say I don't follow the rupee that closely, so I don't know. For the US dollar in general, the retail sales report at 12:30 GMT, which is less than 4 hours from now, is the key event for the US dollar across the board today. Okay, so thank you very much, everybody, for coming. Thank you very much for all the great questions and the great information you also provided here. I'm very thankful. As always, feedback is welcome. The show is running already for some 6 months or so, and any feedback is welcome on any changes in the time of the show, the format, the focus, whatever you wish. And so that's it, everybody. I hope you have a safe and successful trading day, and see you tomorrow. Thank you, and bye-bye.